Thanks so much. Good afternoon, everybody. Always appreciate Rich and Dan for giving me the opportunity to come in and visit with y'all. Basically, I just want to hit a few things today. I just threw this prospective plannings up just to share. So often we talk about the national numbers, but I just thought I'd throw up the Kansas numbers there because I'll let Dan touch on that, and I'll try to get done here fairly quickly so that he can spend some time talking about these two reports that just came out. So basically, I want to do three things. Number one, I want to address some of the questions from webinar registration. I love it when you do that, everybody. So please think about that when you register for this. If you do have questions you'd like us to address, boy, put them in there because it gives us a little time to get ready and share our thoughts a little bit more intelligently. Also, I want to go through and adjust our per bushel cost estimates. I was at a meeting and somebody said, you never bring in family living. So I'm going to try to do that and drive that home. And then if we got time, I'll just share where we are. The slides are there, but share where I am at least as far as, our wheat, corn, soybean marketing plan progress. So I'm going to, let's see here, shut the video off and get moving here. So essentially, one of the questions that came up in the registration was tariff impacts. And in fact, it was two questions. One, how do you see proposed tariffs affecting commodity prices in the long term, not the short term? And then another one, just curious about how tariffs will affect the grain markets this year. So I've got a few comments on that. Number one, tariffs are a tax, right? Now, economic theory would suggest that the efficient use of resources plus trade results in greater prosperity for all. That's going way back to some of the early economists. And when we think about efficient resources, what are we talking about? Well, hey, we're in agriculture, right? We have land, we have labor, and we grow food. That is our advantage. Those are our resources, and we have a tremendous advantage in growing food and biofuels and things like that. The thought is that if everybody does what they're most efficient in, and then we trade, then we're all buying things at a lower price, but we're doing what we're best at. And so we're prosperous financially that way too. So again, I'm not a big fan of tariffs. I'll just be honest. But we'll see if it does help some of our issues that we're seeing. In the short run, my 2 cents is this. I think really the uncertainty and the fear of retaliatory tariffs is negatively impacting perceptions of the U.S. economy and commodity prices. Again, I don't think it's a big issue today, per se, but I think that uncertainty is weighing on things and it could get worse. We'll all find out more at 3 p.m. today when we see what gets unveiled as part of Liberation Day. So it could be more problematic, or maybe we'll work through these things. In the long run, I think tariffs and trade wars. I think this whole thing is a bit negative for agricultural trade, right? The U.S. is demonstrating that we are an unreliable source, that we'll throw tariffs on, we'll take them off. And I get it, we're trying to bring people to the table. I think that's a good thing. But at the end of the day, our trading partners, as we literally are speaking, are working on infrastructure and forging agreements and relationships with competitors, right? China has now opened improved docks on both coasts of South America, improving those things so they can get their ships in there. They're easier. They have spent money in helping the Brazilian government um, dredge and widen the Amazon River so they can get these big tankers further up the river. They've also did an agreement with Brazil, so now they are accepting Brazilian grain sorghum. 5 years ago, they would not allow Brazilian sorghum, grain sorghum, into China. Now they're willing to buy it, and so I think all these things, are steps that other countries are making to make themselves more competitive in the long run with us, and that's not necessarily a very good thing. Um, Another question we had was, hey, what about the impact of different levels of crop insurance on marketing decisions? And I think the question specifically was, could we discuss the impact of different level of crop insurance on marketing decisions? And I guess the thing I'll say there is, for the most part, I look at crop insurance and marketing as two important, yet largely separate decision areas. that are tangentially related. And when I say that, basically on a crop insurance side, we want to make the best crop insurance decision for our particular situation. And so that means, what is our APH? And our APH related to what our potential yields are. In some parts of Kansas, for some farmers, their APH is so low because they've had some drought, they got hit by some problems, and their APH is so out of whack of what they expect to grow if they have soil moisture and decent rainfall. And so, versus other parts of the state where, my gosh, your APH is pretty much your target yield. And so, it's kind of hard to make blanket statements, and it's hard to break that into your marketing. Also, the county's farms, your premiums, all these things go into that decision. So the goal there is to affordably provide farm income and a cash flow base. The one thing that I do think is tangentially related is that, whatever level you're insuring at, that provides, a number of bushels that can cover any pre-harvest delivery commitments. And so hopefully that'll make it a little bit easier for us than to go ahead and make some forward pricing, right? With a forward contract or something, because now I know that if I do get wiped out, I have this number of bushels that I will get paid for, and I could actually get out there in the market and deliver on that contract. So it gives me more confidence to do some of my marketing. We did a little bit of work a couple of years ago, about a year ago, and we just looked at 2 years, I think the 2022 crop and the 2023 crop, and basically just wanted to look at the big picture of crop insurance in Kansas. And I just would share here 42% of Kansas acres are insured at the 75% level, at least for those 2 years, 35% at the 70% level. And again, I think that kind of reflects that whole situation, because if my APH and my premiums are very, very expensive, I can't insure as high as maybe I'd like. But if my APH is fairly high, right in line with my yields, my premiums are fairly low, like we see in some parts of the, say, northeast corner of the state, the eastern part of the state, it's much easier to buy up. And I think, again, the goal is to buy up as much as you can affordably. I would also toss out there, with our revenue protection price for corn at 470, grain sorghum at 472, and soybeans at 1054. I think Dan would agree with me. I think we've got some opportunities that we're going to see futures higher than those levels. And so, revenue protection looks to me to probably be a pretty good choice this year. Marketing decisions, on the other hand, are more based on, like we talk all the time, right? Production costs, local markets, your transportation, your basis, seasonal trends, right? All these kind of things come into play for my marketing. And so really not that many of the same things are in common with crop insurance. Another question we had was this: Milo versus corn basis expectations. And I thought it was an interesting question. I think it came from the Salina area, so I'll start looking at there. But yeah, we have some issues, I guess I'd say, with this. Right now, feed grain basis across Kansas is running lower than normal. I think everybody sees that. Now, I'm going to start here with this. In Salina, grain sorghum basis has on average been stronger, so more positive than corn basis, which really surprises me. I guess for some reason I always thought corn would be the leader. So that's one thing we've seen. And if we look at the 5 years, the last 5 years, the whole calendar year, on average, grain sorghum basis in Salina is like 13 cents over, which again kind of surprised me, while corn is 2 cents over. Now, if you look at harvest, last week of October, corn basis is typically a negative penny in Salina, and for grain sorghum, it's 14 cents over. But where are we at now? Well, grain sorghum both have kind of weakened, right? We're seeing them both weakened here in 2025, but grain sorghum has really plummeted, right? Plummeted hard. And in fact, grain sorghum is now 32 cents weaker, less than the corn basis at Salina. So I think that's pretty significant. But it's not the same everywhere. Right? You get out into western Kansas, say in Garden City, the opposite occurs. Grain sorghum basis has on average been weaker than corn basis, kind of a little more what I would have expected to start with. Again, that 5 year calendar year basis for let's see here, for Garden City, grain sorghum is a minus 1 penny For corn, it's a positive 37 cents. When you go down to the fall and the harvest, corn basis is typically 29 cents over, for, say, that week 40, that last week of October, and grain sorghum basis is typically 4 cents under. But we're having the same kind of situation, right? Uh, Grain sorghum basis has plummeted and is now running 85 cents weaker than corn basis in Garden City, or yeah, in Garden City. And we're kind of seeing a very similar situation out in Hayes, too. I don't have a slide on that. Now, I also want to share this information here. Grain sorghum's advantage typically comes when exports are high. And I think that kind of explains why Salina is a little bit stronger in grain sorghum, because a lot of that's going to get put on a rail and shipped down to Mexico or shipped somewhere to the Gulf, maybe to go to China. Because when China jumps into the market, we really see grain export or grain sorghum exports are very, very high. And what I've got here is a chart. It's the grain sorghum premium over corn, or a discount. That's the vertical axis, axis versus grain sorghum exports as a percent of total use. And so you look at that thing, there's 4 dots where we had grain exports representing 70% of total use. But we've also had 5 years where exports represented 31% or less of total grain sorghum use. And that means then the vast majority of that use is having to go head to head with corn in feed rations. And because of that, we see discounts. And so as we look at that situation, I think that's what's happening to us right now. If we see 6.57 million acres planted this year, that is forecast, and 87.5%, which is about the 5-year trend, is harvested, and we see a 20-year trend yield of 63 bushels, we're likely going to have more production in this 2025 crop than we did in 2024. And if we see retaliatory tariffs, then we got a ways to go. We'll see how that comes out. If we don't see a lot of progress, at least quickly, with 45Z, we have a chance that we may not exceed that 100 million bushels of exports. I don't know. And if that's the case, we're going to be on this lower end. And I think that, my 2 cents, this is not a recommendation, but my 2 cents is that we might see this continuation, and that we'll see grain sorghum basis at running weaker levels. The other thing I want to touch on is just trying to figure out how we can account for family living in our costs, in our per bushel costs. Because I was kind of called out at a meeting in South Central Kansas here end of February, and they said, you never put family living in there. And so it makes our per bushel production costs a lot lower, because, hey, I still got to eat. And I think that's a great point. And so I went back to Kansas Farm Management Association data for 2023. Total family living and taxes was $123,835. Now, if you look at that family living report, you also had $77,950 of non-farm income going into each household, which would equal need of $45,885 per farm. If we divide that over the average number, excuse me, of total cropland, 1,634 acres per farm, that would give us maybe an estimate of $28.08 that I need per acre. And if we divide that then into, say, 155 bushel corn, 43.8 bushel soybeans, and 54 bushel wheat, that gives us 1864 and 52 cents that we ought to be increasing our minimum price that we want to get. Now, again, some farms, right? It's all hands on deck. We're all farming. There is no farm, or there's very little non-farm income. And if that's the case, then you're going to have to see a big increase. For corn, that's bumping that thing up to, it makes it $75 an acre that I need to cover family living. And again, you divide that out by yields, you're talking almost 50 cents on corn, $1.73 on soybeans, and $1.40 for wheat. And I guess I should have put these in there. 234 farm families. That's where that all came for. The bottom line, though, is it's very important to know what your family living costs, right? And I'm trying to get at it. But everybody's situation is different. You really need to find out what that is and communicate that with your banker. But that kind of makes these kind of changes. So it's increasing, my total cost of production. We need $7.89 now on wheat. We need 4.72 on corn, and we need 11.95. And so if I'm forward contracting, those are the prices I would need per bushel, estimated prices, to meet my costs with family living included. Now, there's a blue line, that bottom one, direct cost with rent, my cash rent, and family living. That's 653 for wheat, 388 for corn, and 941. That might be more of a bare bones number that we should be maybe targeting. So, with no further ado, let's jump in here real quick. Review on the wheat side. I've got 30% of expected production price. I panicked there last fall, priced some in. We continue to bottom this thing out there at about 550. We keep on hitting it there and bouncing back up. I think as we look forward, maybe the next area might be 620 if we could just see a rally. And typically we will see a rally. I have to listen to see what Dan has to say, but typically we'll see a rally into May, and maybe we're starting to see that today even. Hopefully we can catch up and we'll see that. But I think that 620 area and then also that 645 to 650 area probably would be relevant target prices. Also kind of called around, hit the websites of some of these places across the state, looked at new crop bids if we were thinking about doing some forward pricing on our wheat. And the average, 6 location average that I've got is 527. And look at that first target I've got of 620. That would give me a 6 location average of 570. Okay. Both the average forward contract bid currently out there at 527 and our first futures based price target would cover direct costs. If we go out there, if we can get that 570, if we can see a rally up to 620, that then would help me cover my direct costs with cash rent. But neither one of these are helping us cover family living. So, the wheat situation is pretty tough right now, and we'll see what Dan has to say, but I don't know if we're going to see much of a rally, and it kind of makes me pause. I don't want to do a whole lot of pricing right now, or at least any more pricing on my wheat. Let's see if we can see a trend up into May. The other two columns I've got there is the 5-year average new crop basis. And so I'm kind of doing a little bit of a comparison. And basically what that is showing us what current basis is doing versus a 5-year average. And for the most part, it's weaker. The one area that's different here is Northeast Kansas, at least Topeka. The new crop bid is actually, I'd argue, a little bit stronger than maybe what the 5 years average would suggest. But for the rest of the state, out there in Colby, the new crop bid is currently 31 cents under what we would normally see there in that first week, that first part of July. So if we move on to corn, basically I'm at 20% priced, 466. We have a price targets. Let's talk about that in a second. Date target is June 15th. Let's let that go. We got a lot of time. Again, very similar situation as the wheat. We keep on just kind of bottoming this thing out. We brought her back down to about 437. We're kind of coming back up. I think last time I looked, corn was a little bit down today. We'll see where we ultimately end up. To me, possible price targets are in that 455 area, which was the last little area that we kind of bounced up twice and then fell back down. That might offer an opportunity. That 470 to 480 area might also provide an opportunity because as you can see, that long-term trend, we haven't broken it. And so, it kind of scares me that 475 may be as good as it gets. I don't know. We'll see what Dan says. Obviously, weather, the trade situation, all can impact this thing. Last thing I want to touch on here on this is the same kind of things. Again, though, a little bit better situation. Both the average forward cash contract currently, my numbers at least, and our first futures price target will cover direct costs, cash rent, and family living. None of them cover our fixed costs of production, but this is a little bit better situation, a little bit better profit situation than what we're really seeing, say, in the say for wheat. New crop basis, though, is running 27 cents per bushel, weaker than what I would consider average. On the bean side, we've got 20% priced at 1073. We're letting this thing go till June. Let's see where how many acres actually get planted, etc. Similar situation where we kind of hit bottom, we go up, we come back down. Targets for me would be in that 1060 to 1080 area. Again, that long-term trend down, will it bounce up and hit that and not get through it? If it does, we could go higher. We are seeing less acres. And again, if we see some drought, that can make a big difference. Same kind of thing here. Both the average forward cash contract that we're seeing in my numbers, 957, and our first futures-based price target are helping us to cover direct costs, cash rent, and family living largely. Again, very important to know what your costs are and communicate that with your banker. But none of these things are helping us cover our fixed cost of production. So it kind of goes on to show that, really 2025, this is a year that we just tighten our belts and try to make it forward. New crop basis, I would argue, is about 45 cents per bushel, weaker than what we would normally see. With that, I'm going to turn this thing over to Dan. Again, I always thank you guys for the opportunity to do this, and I hope it didn't go too long.
So my apologies for the technical thing. So we're coming into the time frame when weather should be more of a factor in the market. So as we're sitting right now on April the 2nd, looking forward out to the 9th, you can see still some dry areas. If anything, a little bit less dry in the 3I states than it had been, particularly in Indiana and Ohio. Still in northern Illinois, parts of Iowa, drier. If anything, the focus of the need for moisture's shifted back over to the western Corn Belt into our neighborhood. You can see from most of Kansas, you've got issues. And again, my office is out in western Kansas, and even though it shows we have no problems, I can guarantee there are a good number of concerned people with regard to that. And in the world situation, you can see how from a world map perspective, how our dry conditions look. Still, it looks like from what we can see by maps that they have dry conditions in the area of our main competitor down south in Brazil and also in Argentina, and more wetness on down to the south. Still no reports on a widespread scale of major crop problems. So I guess we've seen this pattern for a while. In that what we can see from the sky looks like they would be having problems, but not showing up. So that I guess that would in my mind still open up the possibility of late season surprises. As of right now, anticipation of still record soybean crops in a record soybean crop in Brazil. No great worries yet for the second corn crop in Brazil, the safrinha crop. So not offering us a lot of benefit yet in terms of crop issues down in South America. You do see some dryness in some areas that are quite important to the wheat market, particularly in Russia and parts of Ukraine. The USDA has scaled down by about 10 million metric tons the production that's anticipated to come out of Russia this year, down to about 81 million metric tons from 91 or so. But and in country there had been moves by the government to not allow unfettered sales by Russian-based export companies in the second half of their marketing year. So we'll see. None of those moves has brought none of this concern yet has brought major business back to the U.S. shores, especially for wheat. So, Mark, I hear your question loud and clear. What do we see happening on the wheat side? Of course, we looked at that map we just showed, and yes, there's some dry areas. We'll see where that works out here as we're now into April and May and June, heading off into harvest in July. But as of yet, we haven't seen major issues on. Although we've seen problems in the Black Sea region, we haven't seen a big impetus for buyers to come to our shores. In fact, if anything, that that would be a concern out of that part of the world. It's that the on again, off again, herky jerky moves toward some type of reconciliation with the U.S. government being involved with Russia and with Ukraine. Uh, Lots of uncertainty. If anything, we have as much or more uncertainty now going forward as not. So, well, I think uncertainty with regard to what can happen in the Western Corn Belt for wheat production certainly an issue. We have large carryouts. I think 57% stocks used for U.S. hard red winter wheat right now, and that's up from about 48 or 49 last year. So we're not lacking for supplies, and there are a lot of headwinds for wheat, which means by the time people start lining up all pessimistic views on where things are going, then there's a surprise that would come and change that. But as of this point, again, as we look at the futures right now for hard red, 569 and a half for the May contract, July at 580. So we haven't seen major moves to the high side yet. And no major issues often in areas of importance to us. Again, India and China. Although that the dry area in India is the same dry area that occurred about 2 or 3 years ago and caused major problems in that country. So we'll keep an eye on that. And again, not a lot of issues in eastern Australia yet. But we'll keep watching that also. For feed grain markets, of course, the big issue that's happened in this week in the markets has been the release of the prospective plantings and stocks reports. I don't think it was necessarily a surprise to the market, but we did see that a projection coming out of the prospective plantings report of about 95.3 million acres planted. The USDA back in their Outlook conference in late February had said 94. So here we have a number that came in even above that, and you can see where we're at. We have seen since 2016, this is the highest number, and when you look at historically speaking, we have been above that back in 2012, 2013. Of course, 2012 was a major drought. So we didn't really see a lot. The production didn't come at that time. So you can see that the 95.3 million acres produced to be planted. An estimation using this, I guess, the USDA's same estimate that they used in their Outlook conference of percent harvested the planted, we'd be at about 87.3 million acres actually harvested if that number came about. Absent a drought, we'd probably be pretty close to that. And you can see that that's just about on par exactly with where we were back in 2012, 2013. So it behooves us to figure out, well, what does this do to the outlook for crop size and in 2025, and what's the likelihood of how much tougher is it with high corn acres to see prices move to the high side? Just on a state level, again, here in Kansas, 6.4 million acres projected to be planted for corn, and I guess you go through the 3I states in particular, the big ones that we're watching, Iowa, Illinois, Indiana, all up to some degree, where a lot of those acres came from soybeans. So you have one side of the sword and then the other side. So it looks like all that much larger of a production year for corn is turning into I wouldn't say a nail biter, but more of an at-risk year for soybeans. We'll get to that in a minute. And we had a stocks report, and the numbers came in with a little higher, part of the lower stocks, a little higher usage than expected, and that comes into play in our expectations for how we'll finish out this old crop marketing year. And in my own calculations, I've scaled back from about 1.54 billion bushels extended carryout, anticipated carryout, which we had in the March report. Again, by the degree to which the expectations, the expected numbers were higher than the actual outcome, I've adjusted down the ending stocks to put this down to about 1.495 or just under 1.5 billion bushels, and tighten things up a little bit in that old crop marketing year. And so you can see the stocks figure. Again, we're generally we're not in a neighborhood where we haven't been in the past in terms of stocks levels. You can see the total supply, then the DS1 stocks figure is 12.1 billion bushels. The March 1 number now 8.15, and a little higher than where we've been. And I think where my view on this is that when we were really tight in ending stocks back in 2021-22, again 1.2 billion bushels for the September 1, ending stocks number 1.38, 1.36. In these tighter years when we had really high prices, you can see where these numbers were coming in those years, 7.8 plus or minus 7.4, and now we're about 50, 60 million bushels higher than that, and just enough to add more negative perception to the market. I like that word that Mark had used earlier, that it's the perceptions that matter so often. So you kind of put this together with an estimate of what yields are. Of course, that I think that the market right now looks at whatever information's available, and coming out of that USDA Outlook conference, they projected 181 bushels an acre, and that's long-term trend, gaining about 1.9 bushels per acre per year. And you can see that long-term trend in the left-hand side on the right. We've had a difficult time getting much above 176, 177 here last year. We got to 173.8, 179.3. We were at 181, 182 until the final report in January. And now we've come in and projected 181 bushels an acre. So that's the number that most crop watchers are working with and probably what the USDA will put out in the May supply demand May WASDE report there, where you see the first 2025-26 marketing year projection, and that number right now with these high acres, I think we just anticipate that'll proceed bearishly. Again, we'll plug in 181 bushels an acre on the higher planted and harvested acres, and it'll take us to something along the lines of about 1.8 billion bushels, and ending stocks, and total supplies about 1.73 billion. And now you can see there some of my own sentiment, though. You've got this hidden little thing down here that says, I think there's about a 30% chance that'll happen. And that has to do with the challenge of having something that's more than 1 bushel per acre. If you go back a second here, yeah, we have at that 181 bushel an acre figure. We haven't been within 1.7 bushels of that ever, and until last year we weren't within 3 or 4. So, in my own thinking, so you again just following through on this before we show alternative scenarios. So the USDA's projection: 14.1% stocks to use, 2.14 billion bushels, with again ceteris paribus, everything else all held the same. And again, you're getting up to areas in 2016, 17, and 18 marketing years where again you're over 2 billion bushels, 2.1 to 2.3, and pretty bearish time price wise. And with that, again, no change from the USDA's earlier projection of $4.20, and if you get 14.1% stocks to use, that's probably where you'd be. I think that there are some other scenarios that also need to be considered. In my own thinking, probably about a 30% chance that the USDA is correct in that. Again, 3 out of 10 that we would be that high relative on a yield basis relative to where we've ever been before. Now, that's very possible we can get there, so we'll give them their due and say there's about a 30% chance that they're right. And this is my own objective judgment. Plugging in probably more along the lines of about a 40% chance of being in that 177.5, 178.5, 179 range, something like that. Plugging that in, even on higher acres, you go from 15.8 billion bushels down to 15.5, and you just, and I'm saying there's about a 2 out of 10 chance of that, but a 1 out of 4 chance of 175 bushels an acre in some of the dry areas and uncertainty we have, 1 out of 20 chance of the rough year, and we always have that possibility, and that'd be about 172 bushels an acre. But the one thing I note with these higher planted acres, it's just seemingly it's going to be pretty difficult to get anything below 15 billion bushels this year. It's a matter of, and then what we're relying on in these scenarios to have us not just be buried in corn is that low price corn, at least up front, will spur on usage and keep the stocks from getting too great. So you run through these supply demand estimates that I've got here, and look at total usage, unchanged at first, but again, from 181 to 178, still lots of corn, no big problem. You go from 2.14 billion with the USDA is basically implicitly projecting now with their latest numbers out, 14% stocks to use, to about 1.9, just under 1.9, about 12.4% stocks. And you look at historic price relationships, that's about 40 cents higher, about $4.60. If you if you go again to 175 bushels, 175 bushel an acre, and you'd see a lot of concern about crop production in coming months if that were to occur. You're 1.7, closer to 1.7 billion bushels, 11.4% stocks to use, closer to $5, and 1.5 billion bushels. If you get with all these acres, get down 172 bushels an acre, we still have about 1.55 billion bushel carryout and about 550 prices. So, Mark, you're probably sitting there incredulously, but what you look at these percentages. So I'm saying there's a 30% chance we have something below 450 and about a 70% chance something at 450, 460 or higher. Any comments on that with regard to our pricing strategies?
Well, no, I think it kind of backs me up a little bit in the sense that I think, really short run, let's see if we can see this rally because basically we think it's going to happen, right? We think downside risk is lower than we think upside risk is. And so, it's real easy to say, if I've got some stuff priced, be happy, right? But maybe we hold off a while before we do any more pricing.
Well, it I you had talked about the uncertainty that tariffs bring in, et cetera, and um, that and I agree wholeheartedly with your statement that it's not necessarily that there are tariffs, but it's the riskiness and the uncertainty of it, of when they'll fall, what they'll accomplish, I'm not saying that there aren't that there's not warrant for action in that area. And again, as from a university point of view, we have to walk right down the middle of the road. We can't be politically left or right. And I can see the reasons that, or I hear and the reasons stated for such tariffs. But and so regardless of that, the uncertainty of it, of a situation, when you bring that into a marketplace, and if people see that, gosh, and any announcement could happen, we're uncertain where this is going to go, it tends to depress prices. So we're dealing with that some of that right now. So we'll see where it all goes. Moving forward, so I just want to show this graphically. So yeah, this is basically what the USDA's projection is right now with the new acreage numbers. Using the yield numbers, we're looking at 181 bushel and about $4.20, 14% stocks to use. But then you see these percentages that we have the likelihood sometime out here in the summer to at least be considering having more production risk coming into play and giving us the possibility of higher prices. Okay, in the time we have, I'm going to move pretty quickly here. I just wanted to show you that the USDA WASDE report on March 11th projected about 435. If anything, right now the futures are projecting a little bit lower than that, at least as I calculate that with the prices we already have in hand, plus the futures that are out there. future going in basically from now to the end of this marketing year on August 31st, using current basis levels, most recent ones we can get hold of. So if anything, the futures are a little bit more pessimistic even than the USDA's for 35, and it just goes along to say with the general generally very cautious tone of the grain markets at this time. Okay, and just wanted to show you that you can see some of this in the positions of traders. You'll note here on for net positions of traders for managed money specs, those that we had gotten pretty long, pretty strong, about 1.8 billion bushels to the net to the buy side within the last month or two, but a lot of that subsided here of late, and now are moving towards about neutral. And you can see the long, if you break out the longs and the short positions of these traders, they had gotten, again, within the last February, March, or earlier on in March, we had seen got up to about 2.2 billion bushels long, and that's been cut in half. And we're starting to see even during a time of seasonal, where we normally see seasonal strength coming into April and May, starting to see the bears expand their position a little bit. We'll be watching that to have an inkling of where the markets are going. Okay, I want to move quickly on to something in limited time. Market talked about basis levels. Yeah, they're weak, and again, the world situation is not overwhelmed with corn. If anything, we're to levels of tightness with when you look at both overall world stocks to use and world less China stocks to use. Kind of lean on that just because of the difficulty that China has in that accurately quantifying what they have. So you've got that. See the tightness of stocks. World minus China, 88%, or 88 million metric tons, and you see this long-term trend. So I guess I would say if that the world has decided that we're not going to store stocks unless we have to. It costs money. It's capital sitting around, so we're tight. We've been tightening up for several years in this. It's a long-term trend. There are economic factors driving it. So I guess what I'm saying here is that there's not a lot of cushion in the world that's now operating on kind of a hand-to-mouth basis that we can absorb a crop loss any place. So if we have a challenging crop this summer, that's one more factor that would tend to drive us towards responsiveness price-wise. In the report, we saw something that I think we don't want to just ignore or not give enough credence to, in that the USDA had come out in February, projected 6 million acres of grain sorghum to be planted. And again, when we were looking at prices, as you were talking about earlier, Mark, and weak basis levels in a lot of Kansas locations, we thought, well, yeah, they're probably right. But in the prospective plantings report, we showed an actual increase in U.S. grain sorghum acres to be planted, just under 6.6 million acres to be planted. You can see that with them using reasonable estimates of harvest to planted, about 5.7 million acres to be harvested on a projection. And and that would give us a production level of about 392 million bushels produced, 444 million total supplies. And so I guess there's some questions come to mind. Well, how come we're seeing that? Well, with generally low prices for feed grains and other crops, weak basis really across the board in Kansas. One thing about one advantage of grain sorghum is that it does have some cost efficiency benefits. Again, generally lower seed costs. You can argue about fertilizer costs, etc. For those that have dealt with drought the last several years, grain sorghum competes with drought-tolerant corn varieties in in for acreage. And you can queue up the bigger question of where we go on limited irrigation years. Are we going to drought tolerant corn? Or are we going to grain sorghum? So anyway, you've got a number of these factors, but how for whatever set of reasons, farmers are intending to vote with their planters and to not continue to decrease grain sorghum acres at least in this year. And I appreciate your comment, Mark, about Brazil now shipping grain sorghum to China, or at least having the opportunity to. There was a point in time when we were having a fairly decent pace of grain sorghum exports in the U.S., and then we stopped and we've gone sideways. And we keep showing this and thinking that that'll change, but as of right now, we haven't had strong grain sorghum exports at all. So grain sorghum is it's a strong competitor. It's a competitor for feed usage. It can be used in ethanol, ethanol in the FSI food seed industrial usage numbers. So if there's anything that I think is probably likely to happen is that low cost grain sorghum at this time is likely to be attractive for users, and it caused a change in some of these systems. Now they're handling sorghum instead of corn for a number of those uses. But hey, in times of tight profitability all up and down the supply and industrial production chains, hey, a lower cost input will be compared on a productivity and a cost basis per unit. And I would guess that grain sorghum probably will enjoy pretty strong usage in some of these other areas, just on a cost of profitability basis. So we'll see how that goes going forward. And you can see some of the trends that we've had in all that. I would project that grain sorghum stocks jumping up to about 65 million bushels, and that's an estimate plus or minus 10. We have been there before. Look back in 2018-19, but you've got this kind of shock coming into that system and affecting things. I want to look at soybean markets. Corn had gone up about 5.2%. We're down about 4% for soybeans, and you can see the acreage figures. We haven't been that low since basically 2020 for plantings. Acres, again, you can see the 82.7 million acre projection, and if anything, that's probably a strong harvested to planted acreage estimate in my own thinking, but still, it's 82.7 million acres, down about, from 87.1 last year planted, down to 83.5 this year. And why? Why would people cut back? Well, we see what's happening in South America and in Brazil in particular, with strong crop coming on, a lot of a concern about where those markets will go. Again, Brazil showing, and Argentina, Paraguay add in there too, showing no motivation to cut back on their production. So farmers looked at that and it's affected their expectations with regard to where that market will go. So now they've adjusted and again we've changed the expectations because of our earlier expectations. It is as it is. It's the way markets go. You can see in Kansas, 4.3 million acres projected to be planted in that prospective plantings report came out on Monday, down about 5%. And you can see all through most of the central Corn Belt states, except for Indiana, you're looking at significant reductions in planted acres. Stocks numbers were a little bit higher than had been, whereas the corn usage figures, because low prices likely, were stronger than had been expected. For soybeans, we actually saw a little bit less usage than had been anticipated coming in this report. And you can see the similar chart to what we'd seen earlier. I took that change and adjusted my current crop 2024-25 projections, and stock projections. Again, that's and you'll see it here. I think it's about the 15 million bushel differential. use the latest projection again, and here's the USDA's projection that they had for yields, 52.5 bushels an acre, coming into coming out of that USDA Outlook conference. And again, have we been there before? Well, we've been closer to it, to the soybean projection than we have been to the corn projection. We have been at 51.9, 51.7 in 2016, 2021, 51 earlier. But again, I think it's another situation where we haven't ever been above 52 before, and we're projecting that. And this number, that 52 number, will be what the USDA uses almost assuredly. I'll probably have to eat my hat on that, but almost assuredly in May. That's sort of the pattern that we have. They're almost projecting capacity as much as expectation. That's my own thought. So a little bit of a cutback in terms of anticipated production, and you still have the still have strong crush going on. Exports really doing pretty decent for soybeans, at least to this point. Stocks to use. So that number, the number that 287 million bushel ending stocks figure that we be projecting would be down from USDA's earlier projection that they had in their Outlook conference, which was oh gracious sakes, I have that right in front of me. But anyway, I think that figure that the USDA had projected earlier on that the market was operating off of was 320 million. So now you're down about 33 million from that earlier projection. We note for the 24-25 marketing year that 395 million figure is an adjustment I made to the previous 380 based on the change in the stocks and the old crop. So now you're looking at, after 2 years of 8.3%, 9.1%, with all else being unchanged, something below 7, about 6.1, 6.5%. And anticipation for next year, 6.5% stocks to use, leaving the USDA's projection unchanged from their Outlook conference at $10. And I see it, I understand it, I see where they're going. It's the normal mode of the USDA to be pretty healthy in their projections. But again, I think there's about a 1 in 4 chance of that yield actually occurring, and something more along the lines of 51, where we've certainly been before pretty readily with any type of decent year, 51 bushels an acre. You can see in this second scenario, 40% likelihood of that, 2 out of 5, 30%, 4.9, 49.5 again, and again 1 out of 20. Things getting pretty rough with 48. So again, 75% chance of some yield and production number less than what the USA is projecting. So Mark, I'm going to put these up here, and if you were incredulous on the corn, you'll really be incredulous on the soybeans, in that the 287 with just as it stood, with good yields at 6.45% stocks to use, using the USDA's projection number of 10. If you start shaving off 1.5 bushel per adjustment, you're getting closer to, instead of $10, it's $11.50. Instead of that's at 51 bushels an acre, 49.5, 4% stocks to use. Again, you're getting above 12.5 to 13 and on. So if this comes about, you would see this type of a challenge to the yield expectations, probably not after planting in May, but that's probably a July, August, September situation. Mark, any comment on this?
Well, the only thing I toss in there would be, to me, then you're suggesting is that there's more upside, right? Price potential than we have downside.
Yeah.
And so from a marketing plan standpoint, it makes, just kind of cements that fact that, okay, hold it, let's hang on here a while. We got a lot of spring. Given your outlook, there's some good opportunities here. We think the potential for some further price rises that we could see, giving us some opportunities to actually, maybe lock in a better price later. So no, I'm with you 100%. I totally agree. I think we got more upside than downside.
And in that, let me hit on some things pretty quickly because we're at one. I don't want to go way longer than we thought. We've already looked at that. Again, futures are lockstep with the USDA. $10, 10.30, something like that. You can see by their numbers both for the current marketing year ending August 31st, and then I've got the extended futures out, and they're about 10.30. So again, slightly more optimistic. One thing I do note that projection for the projections for both the current marketing year and next marketing year, almost no seasonality in there, just basically flat. So it those of us that watch the futures, again, what are they projecting? Well, they're pretty front loaded, and where are we at right now? And we'll take care of tomorrow later. And not trying to be, I'm not critical at all, but that just seems to be what we observe. So, and you really see that out there in the 25-26 marking year beginning September 1, just a flat expectation and uh, wait, in essence, just waiting for information. Uh, Futures have started, again, managed money traders, some of the strong positions they had earlier are starting to unwind a little bit. So consistent with what we just talked about. Did want to say that for cotton, cotton had a pretty strong a pretty large drop in acreage, let down almost 12% from the previous year in terms of planted acreage out of that March number. And you can see the trend generally down, except in Kansas. So here in Kansas this year, we're up about 7% but I guess that's between Kansas and Arizona in terms of of cotton moving to the higher side. So we'll see. Cotton certainly a significant crop here in Kansas, and we'll watch what the acreage does. And to finish up on wheat, again, planted acres, uh, we're down coming out of the prospective planting report, even more than had been projected in early January in that winter wheat and canola seedings report. So down a little bit lower and sideways to a little bit lower on the numbers. You can see the Kansas figures about 7.3 million acres, down just about 4% from the previous year. And you can see some most of the so in the hard red winter wheat areas from Nebraska, Kansas, Oklahoma, down some, unchanged in Texas, where most of the increase happened would be again to the east, soft red areas, up to the northwest, winter white wheat moving to the higher side. Just and interesting. We talk about in my thinking, look at the weakness in hard red winter wheat exports. One class that's going really strong is white wheat. A strong move export wise, going to the Pacific Northwest, Portland, Vancouver, and on to Asian markets. So interesting to watch. Okay. Okay. So the futures are just about on par with uh, what the USDA is projecting for the next marketing year. The USDA is projecting for well about 545 or thereabouts actually for this old crop marketing year, and new crop marketing year about 550. So Mark, we don't want to talk down the opportunities in the wheat market, but we sort of have a slowness of view, a very much a Missouri-ish show me attitude to anything being positive, and I think it has to do with the export pace, and we're just with the high U.S. dollar. That's a headwind for wheat exports, especially as that continues. You have a lot of pessimism with regard to all of that. Okay, with that, I think with that, one other thing, um, we talked with a lot of talked quite a bit of pessimism in the wheat market, but yet when you look out into the futures, there are strong carries, strong carries. Now, my understanding is that grain elevators would take in wheat and they put storage hedges on them, they would take advantage of these carries. On the farmer side, we're not we're more inclined to store and sell and not be involved in the storage hedge uh, uh, approach to making money on futures. But yet, so May futures 565 by the time we'd harvest. Let's say that 577 is still there for July futures. D 614, you'd have a benefit on a storage hedge of it after some adjustment for the um, dealing with the broker and hopefully having some basis gain through that time. That's that's 23 cents to get to six, another 14, 20, 33, 37. I think that's 37 cents of gain. We would a lot rather have 50 cents to $1 gain. But yet there's some money out there in storage hedges to be had. Mark, this is my final slide. Any thoughts that you'd have?
Yeah, well, more of a question to you. As we go through, a lot of times we're seeing, I think, more and more, especially out in Western Kansas, folks will store wheat to grab that protein premium. And I guess I'm kind of curious, have you looked at that at all? Do we have a good shot that there could be some premiums for higher protein wheat? And again, that would give producers an opportunity to maybe, hey, yeah, I ought to hang on to some of this, especially if I know I've got some protein. Typically, we'll see that more in the western part of the state than we do in the central and eastern parts, but I think it affects everyone if you're managing for protein.
Well, and we have two plants in one is sent well, and one in Phillipsburg, the other in Russell in the western part of the state that are both wheat gluten producing. Well, they're buying wheat to process it into gluten, and a good quality product would be something to market to them from a farmer point of view. So, do we see opportunities? I think that the wheat industry is building processing facilities to come take advantage of whatever wheat protein slash gluten opportunities that farmers may have. Um I just remember for so many years we had wheat in on-farm storage. We had to move it before December to make or before the fall to make room for the following crops, either corn or sorghum in particular. And so I don't know how many farmers are equipped for are thinking long-term storage till later in the year. Now, elevators certainly focus on long-term storage. I think that's been a major profit center for grain elevators in Kansas for years and years and years. And in fact, when we had some very tight wheat crops, I again hearing secondhand, I think that was a great challenge for the profitability of a lot of our grain elevators because they through managing basis, through managing transportation and their storage, they made was a profit center for them. So I guess you asked me a question. I've talked in circles for about 2 minutes. Giving you a straight answer. Is a pot? Do we have opportunities? Yes, there are plants that are going after that would welcome high protein wheat. Do we think along the lines of that type of long-term storage? In general, there certainly are some, but I don't know that in our typical commodity focus we've been doing that. We're not North Dakota with hard red spring wheat where farmers build bins on each farm almost to try to wait and hit the protein market. We've been more the commodity market. So I guess in order to think that way, we'd have to be more like our North Dakota cousins and less like what we have been, which is just have a pretty much of a wheat commodity focus. Does that make sense?
Oh, sure. I guess I was looking at more. Do you feel like there'll be decent
No.
premiums
Well,
for that? I mean, yeah, we've got those places that are demanding it, but I mean, but I'm sure they're gonna pay as little as they have to get good quality wheat. But so the question is would there be premiums for that protein this year? And then I just noticed, in our March in that stocks report, we've got 11.8 million bushels on farm wheat stored in Kansas, which is the most we've had since 2020. And I'm sure they're hoping that the market's
yeah.
going to pay them a decent premium for that. But I guess I didn't know if you had any insights on that or had
Well,
thought about it much.
when you first said that, well, what's the going to be the quality of this year's crop? You know what I mean? Did
Yeah.
are we have a crop in that'll be coming in the field? Do we are and the I guess the better moisture we have, the less protein premium that crop will have, less protein that crop will have, that and the worse off, the tougher, generally drier, that we have higher protein in an inverse manner. So um, I I don't think we can answer that question until we till we see what we have out into May or even June. It's right now. I think it's a pretty speculative deal, and we certainly have the quantity already. But if we were going to come in and have higher hard red winter wheat protein premiums, we probably have to have a a again, if I understand it, if you had wheat that had good protein and the rest of the countryside was awash with low protein wheat, well then there's a way to make money that way. If we have a drought all along, then any wheat you grow is going to have a higher price, but it might all have pretty a lot better protein and wheat protein premiums wouldn't it be as high? So I guess we're Mark, you used to be out here in Western Kansas. I guess that we learned about the wheat protein market by baptism by fire, literally, to see if there are good prices or not for wheat proteins.